So, Charlie, inflation arrived and has gone again already, right?
Oh, stop. Well, no, absolutely not. Inflation, finally, we're getting that people are acknowledging inflation is here. Mr. Powell has been denying that was here. He was saying, what are you going to believe, me or your lying eyes? And we saw a very scary number, 0.9% in 1 month. The apologists for inflation say that this is all about where inflation was a year ago, but that 0.9% is versus a month ago. So we are having real inflation right now. All the markets are showing it, the tips market, the commodities markets. We are just now seeing inflation in the numbers, but we're going to be seeing a lot more of it for the next at least year.
But what leads that to actually hurt stocks, Charlie? Have we seen this week that only when yields spike as well, the stocks sell off? They've settled back the yields over the last 24 hours or so, and stocks are rallying. So does that mean, again, that for the next few weeks at least, until we get another print perhaps on the inflation side, and unless or until rates do have to go up, that actually stocks are going to be the best place to be again?
Yeah, discount rates are not necessarily the same thing as 10-year Treasury rates. Discount rates are the rates in which people discount the future earnings, particularly of growth stocks. And that's not necessarily the same thing as the risk-free rate. I admit I'm stupefied as to why anybody would buy a 3-year Treasury rate for 33 basis points of return, knowing you're going to have a negative return. But there are people that are doing it. But that doesn't necessarily mean stock investors will. And stock investors are increasing the discounts that they're putting on long-term earnings. That's going to be bad for growth stocks and relatively better for value.
Shepard Smith here. Thanks for watching CNBC on YouTube.